Good evening, everyone. A very warm welcome to today's webinar organized by Hyderabad Chartered Accountants Society. The topic for this evening is SME IPO, a subject of great relevance for emerging businesses and startups looking to scale through public markets. With us, CA Manohara Madineni sir, who will be leading today's session. I would like to give a brief introduction of Sir. Manohar Sir qualified as Chartered Accountant in 2016 and currently heads Ledger Services Private Limited branch at Hyderabad, wherein he specializes in advising startups and technology companies on tax structuring, incentives, grants, global financing, and end to end compliance. Sir has extensive experience in GST matters, including litigation and advisory. He actively represents various clients before the GST authorities. Sir holds multiple certification courses from ICAI, including certificate course on GST, certificate course on Ind AS, on AI for CA. Presently, Sir is part of HCAS as Vice President and he's also actively involved in TIE Hyderabad. With that, let us invite CA Manohara Madineni Sir to take us through this important session on SME IPOs. Over to you, sir.
Good evening, everyone. I think the crowd is not much. If people want to turn on the camera, that is also fine. And SME listings have been increasing year on year. When it started in 2012, it was very small. Today, there are more than 1,200 companies which has been listed in SME and actively more than 900 companies which are being traded. 800 to 900 companies which are being traded in the SME, both the BSE SME platform as well as the NSE Emerge platform. And Asan, I mean, like just before going into the session, maybe Asan today, when I go to the SME portal of BSE, we see that around 607 companies have been listed. Okay, including the migrations that has happened from the regular exchange to the SME exchange. And as of now, they have raised around 10,884 crores. Okay, market cap, as you see, is 1.87 crore, 87 lakh crores. And I mean, like actively traded right now is around 366 companies which are being traded in BSSM. Similarly, it is around 625 companies which have been listed on the NSE, okay, of which some of them migrated and then some of them are being traded in the NSE as well. So, any questions if you have in between, you can drop in what do you call Q&A. Then we can take the questions accordingly. This is basically pure regulations from the SEBI point of view, which I'm reading rather than what you call the practical issues. Maybe practical issues we can take an advanced session whenever time permits next time. Okay, and a couple of companies we are in the process of listing. We'll also learn over the period of time, next 2 months. We'll also understand what would be the challenges that we will be facing while listing these companies. So today's agenda, we are going to look at the SEBI regulations, ICDR regulations, and then SME exchanges, any additional requirements apart from what is specified in SEBI, and Companies Act requirements generally, I mean, like appointing an additional directors and independent directors, women directors, etc., would be additional requirements once you become a public company and once you become a listed company. Then, if you want to invest in SME, then what would be the minimum lot size and how to subscribe them, basically, what is the way they allot. These are the couple of things at the investor side of the SME which we will be looking at. And eligibility conditions, if you see, these SME listing, whatever is doing either in BSE SME or NSE Emerge, both cases, these are the requirements because these are requirements as defined by the board. Okay, SEBI. So these requirements is basically if you are issuing equity, then up to 10 crores. If your post issue paid up capital is up to 10 crores, then you can issue equity shares only. If it is more than 10 crores and up to 25 crores, you can issue shares and debentures and other convertible securities as well. And to get into SME platforms, at least you should be an entity having more than 3 years old. Either it may be a private limited company or it may be by way of converting a partnership on LLP into a private limited company. Either in these cases, you should have at least 3 years holding. However, if you have converted from a an LLP or a partnership firm, then at least you should be complete 1 year should be completed as a private limited company. Then there will be additional requirements which will be according to the each exchange, and BSSME has little more requirements compared to NSA much. So we'll see those requirements when we look into the each stock exchange requirement separately. And any conversion from a partnership firm or the LLP, then the company has to reinstate the financial statements as per Schedule 3, and also it should be certified by an auditor. Audit firm should have been peer reviewed, and these should be as per the Schedule 3, and it should have follow the accounting standards as per the Companies Act, and also it should show true and fair view. Then only what you call whatever the converted partnerships or LLP would be able to what you call go ahead and for the listing. So one full financial year is something which is a requirement, even if you are a partnership firm which has been converted. Then once you are through these requirements that you have been at least in 3 years in existence, then you would be going into the next stage. Then you will be always looking at the which stock exchange you wanted to list, either BSE SME or NSE emerge. You will designate one as if you are taking more than one exchange, then you will designate one stock exchange for the purpose of listing, and then you'll also have an agreement with the depository for listing all these shares, for maintaining the listing of all these shares. Then existing partly paid up equity shares which have been partly paid either should be converted into fully paid before issue, or it should be forfeited. You can't have outstanding shares which are partly paid as on the date of issue. So before the issue, you should be having all the shares which are fully paid up and which have been allotted. And 75% of the project value, whatever you're going for IPO, for example, if you're going for IPO for 4 crore rupees, and then 70, I mean, like project value is say 10 crore rupees. Okay, then 75% of the project value, which is 7.5 crore, should have firm arrangements. Either, I mean, like wherever you don't have firm arrangements, then you even sanction letter from the banks, etc., would also consider as the firm arrangement for these purposes. Offer for sale, whatever you are doing, apart from what you call raising new capital, if any existing shareholders are selling their shares, they cannot be more than 20% of the issue size, and the promoters should always hold more than 50 cannot be, I mean, like whatever the promoter shareholding is there, for example, they hold 100 shares, then they can't sell more than 50% of their holding during the offer for sale. Objects of the issue cannot be for the repayment of any loans to promoters or promoter groups or related parties. Then if you're raising money, then whatever money you're raising, it should be for certain purposes. Unless otherwise, if there is any general corporate purposes which the money is being raised, it should not exceed 15% of the money raised. So, for example, any what you call working capital purpose or any other purposes, if you are raising money, okay, which is not for any specific project as such, then it should exceed 15% of the total amount that you are raising. And also, if you are raising money for the purpose of acquisition or investment, along with the general corporate purpose, both should not together exceed 35%. However, if you are raising money in only for the acquisition investment purpose and any other project purposes, then the acquisition of the investment should not exceed 25%. And also, whatever the kind of acquisition, etc., this has to be detailed in the prospectus. Certain companies or certain promoters who would not be eligible for the what do you call SME IPO. Anybody who has been debarred from accessing capital markets, either in this company or any promoter or of this company or promoter group or directors or selling shareholders, or in any other company, such promoters or promoter groups or directors or selling shareholders are part of, then then this company would not be eligible to go for SME IPO. Basically, either in this company there is a default that has been made, or in the other company which has been debarred from capital markets. In both the cases, the eligibility will not be there. Then willful defaulters, if there is any willful defaulters of repayment of any loan, etc., then those promoters and directors are part of this company, then such companies would not be eligible for the IPO. Any fugitive economic offender, as per the Fugitive Economic Offenders Act 2008, are there in the company there as promoter or director, then such companies would not be eligible for the IPO. Basically, anybody who has been staying outside India after the offense are defined as fugitive economic offender, then those people will not be able to, those companies will not be able to uh, would not be able to uh, would not be able to take the SMIPO benefit. Any outstanding convertible shares are there, then those outstanding convertibles should be converted well before this, or otherwise it will not be eligible for uh, SMIPO, except if it is ESOPs which have been issued to employees or fully paid up convertibles which are already, like paid completely. It's only conversion which is pending. Then such convertibles also should be converted before going to IPO. Then they will be eligible for the SME IPO. Lot of times, promoters holding would be a requirement both in the regular IPO as well as SME IPO, where there is an identifiable promoter, then at least 20% post-issue of capital, post-issue capital should be held by the promoter. Otherwise, if there is no such identifiable promoter, then there is no such requirement. In case of any shortfall, such shortfall can be covered by the any alternative investment fund or the foreign venture capital companies or the banks or insurance companies. And for the purpose of this, the 20% is always counted the general issue through which, like money paid shares only, not like any shares issued out of revaluation of assets or any bonus shares out of the revaluation reserves or the unrealized profits. Once the IPO gets listed, okay, these promoters, whatever the promoter contribution is there, it should be locked for a period of 3 years. And this lock-in is also communicated to depositories, and depositories also maintain such lock-in to such safes. For example, if you see promoters, minimum promoter contribution should be 20%, as we discussed. So this 20% will be locked for a period of 3 years. Anything in excess of that, okay, 50% of such excess after 2 years it can be sold, and remaining anything more than what you call 50%, remaining would be able, they will be able to sell it within 1 year. Other than promoters, any pre-issue capital except ESOPs or the venture capital or alternative investment fund which has been invested into such company, and for that it is not from the date of issue, it will be counted 1 year. 1 year would be counted from the date of purchase. As I said, all the lock-in should be recorded by the depository. Any shares which need to be pledged for any loan for the purpose of projects. Okay, that such pledging would be permitted in case of any promoter shares are being pledged. And I mean, like at the time of issue, there are a lot of intermediaries that will be involved, which includes major one is a merchant banker. So one or more merchant bankers can be appointed. There will be lead manager, uh, one or I mean like lead manager who will appoint help us to appoint the other people such as registrars, syndicate members, or the bankers to the issue. And also there is a mandatory requirement of to appoint a company secretary as a compliance officer to monitor the compliance and redressal of all investor grievances. And also he is responsible to take care of all the compliances are happening or not. Disclosure requirements, all the material, see, while issuing the shares, whatever the draft credit hearing prospectus would be there, those prospectus should contain all the information, something similar to the regular stock exchange, okay, or whatever required disclosure required as per Companies Act, whatever disclosure required as per Part A of Schedule 6 of SEBI regulations, ICDR regulations, and payment to all the payment to employees, whether the EPF, PSI, other labor laws, whether they have been paid on time, including how many number of employees are there, etc. And also these stock exchanges will visit the site, so they will have a site visit report, which is also need to be reported in draft adhering prospectus, and also fees how much you are paying to the lead managers that also need to be disclosed. So lead managers should always exercise due diligence about the adequacy of these disclosures, veracity of these disclosures. If there are any disclosures that need to be additionally made in respect of a specific company, those disclosures has to be made. And also uh, the due diligence is a very long process. They take a lot of details, including the promoters' relatives, including all the relatives as per the relatives definition as per the Income Tax Act. Okay, all the relatives details. Okay, they will look into anybody holding directly or indirectly any shares in these company or their holding company. Okay, or their subsidiary company. So due diligence is a very long process, and also from the date of incorporation until the what you call listing, whatever the regulations as per the MCA need to be followed. Everything will have to be gone through. Okay, wherever there is any delay in filing or wherever there is any late fees need to be paid, wherever there is non-compliance that has to be rectified, then only what you call you should be going ahead for the listing. So while listing, I mean like the companies which are compliant can go at a very faster pace. The companies which are non-compliant would always take time and efforts and also need to rectify all those non-compliances uh, which are there. So if you see, I mean, like there are a lot of certifications which will be required, even from the chartered accountant point of view. Let us go through maybe certificates by, I'll just share the index. So, so able to see the screen. So any certificates, number of certificates need to be issued by the auditors, which includes uh, certificates such as related party transactions, past allocation of shares of the promoters, ratios on the basis of which you are issuing the shares, any non-payment of statutory dues, reservations, qualification, adverse remarks, anything is there. Build-up of share capital, outstanding due to creditors, promoters' contribution, all these different certificates, which will be around 35 certificates, which need to be issued by the chartered accountant. Uh, issue expenses, time and cost overrun. All these certificates would run into multiple pages. This is the format which the BSA SME provides for those certificates. there are too many certificates. I mean, like we can't go into detail of all these certificates for sure at this point in time. But for the sake of understanding, I'm just mentioning our audited deliverables would be around few hundred pages. You will be issuing at least 35 to 40 certificates as an auditor. Allow me, can I just reshare the screen? So before going to issue, always all the compliances need to be taken care. Due diligence will take a month period of time easily. Here to reduce the due diligence, if there are no compliances, that always helps us to reduce the overall time. And generally, it should not take more than 3 months to get get yourself listed into stock exchange. The company to get listed into stock exchange. So within 3 months, you should be able to what you call go ahead and list into the stock exchange. Maximum it would be 4 months, 4.5 months in case where there are documentation delays. So whenever you're issuing offer document, then you need to submit these offer document to register of companies and SMEs along with the due diligence certificate, site visit report, and also you need to display on the website of your own website as well as the issuer, whoever is basically the issuer is you, and the board would be SEBI, and lead managers as well as SME exchange platforms wherever you are going to be getting listed. So if you have applied both platforms, then both BSC SME as well as NSE emerge, both the platforms you will be getting listed. And all the soft copy of the what you call the same should be submitted to SEBI. However, SEBI will not issue any observations as like they generally issue for the regular IPO. In case of SME IPO, it is only the stock exchange who takes care of everything rather than going into the board. That is basically Securities Exchange Board of India. So that is the reason the time generally taken is much lesser compared to the regular IPO. Generally, regular IPO, it always comes back with the comments from the board. And also before what you call before going for the issue, you generally issue these documents for the public for public comments, and also you need to publish in multiple newspapers, including one in English, one in Hindi, and one vernacular language. There are three different newspapers you need to publish before going for the issue, and also any changes need to be made based on the comments either issued given by the stock exchange or by the public. Those comments would be incorporated and the revised draft red herring prospectus will be submitted to the exchange. Then whenever you file with the exchange, then the what do you call whenever you apply for the uh, these stocks, generally at least 35% of those should be given to individual investors, and how much each individual investor can apply, etc. We'll talk about at a later point in time. And minimum of 15% should be given to non-institutional investors. Not more than 50% should be allocated to qualified institutional buyers, include out of which at least 5% should be given to the mutual funds. Then in case of these qualified QIBs also, one third of these should be given for the people who has applied not more than 2 lakhs up to 10 lakh rupees, because generally minimum is 2 lakhs everybody has to apply, which we'll discuss at later point in time, and which generally would be more than 2 lakh rupees. So if anything less than 10 lakh rupees been applied, anything less than 10 lakh rupees is being applied by the QIBs, one third to such QIBs should be allocated, and remaining two thirds should be for the people who has applied worth rupees more than 10 lakhs. This is in case of book building process has been taken into consideration. Wherever there is no book building process, then at least 50% will go to the individual investors, need to be allocated to individual investors, and remaining will be allocated to all other types of investors, basically non-individual investors. SME, each SME exchange requirements would be in addition to what is been already discussed as what do you call minimum general conditions, okay, or eligibility criteria. So these SME exchange requirements are generally would be almost same in both the case of SME, BSc SME as well as NSE emerge, except barring one or two differences. So if you see, I mean, like post-issue share capital shall not be more than 25 crores, which is a requirement as per SEBI regulations itself. The same requirement would be there both in BSc SME as well as NSE merge. And net worth should be at least 1 crore for two preceding full financial years, which is a requirement as far as the BSc SME. NSE, you see, net worth should be only positive. Okay, they don't say that how much net worth should be there, but here there is a net worth of at least 1 crore for last two financial years of, is the requirement, while there is no such requirement if you see in the NSE. So wherever such requirements are not qualified, then you can choose right exchange based on the each SME, uh, each company that you are going ahead and filing the SME. In case of net tangible assets also, it should be at least 3 crores net tangible assets, while there is no such requirement in case of NSE emerge. And then operating profit would be the same requirement, 1 crore for at least two financial years out of last three financial years is the requirement under both BSc SME as well as NSE emerge. Track record of 3 years, basically 3 years it should be in existence, that should be requirement. If there is no such track record of 3 years, then it should be funded, at least one full financial year should be funded by the financial institutions, such is an exception, which is there under the BSc SME. The leverage ratio should be 3:1. All the shares should be dematerialized. Then there should be website of the company, which is a mandatory requirement. You should have the website of the company, and there should not be any change in promoters in last one financial year. Is a requirement. Okay. So same requirements, there will not be much change. Only thing is that you don't have the requirement of net tangible assets. Our net worth requirement is 1 crore here, and there is no net worth 1 crore requirement. It is only net worth which is positive. And additional requirement is, I mean, I should have free positive cash flow to equity, which is the requirement here under the NSE. Any questions so far? You can go ahead and ask the questions. Otherwise, I will look at the company side requirements. So under Companies Act, what are the requirements under the Companies Act for a listed company, which will be applicable? Immediately, you need to, what you call, think on appointing an independent director, having a woman director. Then every half yearly, you need to publish financials. Because these are the immediate requirements that you'll have once you become listed company. So there are other requirements which would also be required, like such as appointing a company secretary, etc. Then from the side of the investors, for example, whoever wants to invest in SME IPO, what is the requirement?
Just can you show me the requirements for BSc again?
Requirements for the BSc. And
Actually, the primary difference between the BSc and NSc.
this is BSc requirements, sir. It says that net worth should be at least 1 crore and net tangible assets should be 3 crores. While
Okay, this is no. See, just to come to the previous slide, sir. Net worth should be at least 1 crore. Means should it be in the form of capital or it can be in the form of any other thing? Whether in
basically,
the form of capital or it is not in the form of capital or something else, or in the form of premium also, or in the form of say something else with from the unsecured loans from the directors or whatever, quasi capital, whatever you say.
you need to look into the formula, sir. I'll come back to you first. One.
Yeah, sure, sir. Thank you.
Manohar, just to add here, the net worth includes only the share capital and the free reserves of the shareholders. Loans bought by the promoter it comes under the below the share capital and net worth, sir. For the purpose of net worth, you need to consider only the free reserves and share capital.
Share capital. Fine, sir.
Yeah, fine, sir. Fine. Only share capital share capital plus free resource in the sense securities premium also comes under there. So profit and loss account, whatever accumulated is there, that also will come.
Yes, sir. I can give you a different formula. You take the total value of assets minus secured, unsecured liabilities, which are due to the operations, non-operations, and financial borrowings.
That was fine, sir. That was fine. Okay.
Thanks, sir. Yeah, Manohar, please.
Yeah. And as far as whenever you want to invest, generally you should at least take minimum of 2 lots. And the applications in terms of amounts, it will be more than 2 lakh rupees. So each lot would be more than a lakh generally. Minimum payment for the application should be at least 25%, which is generally mentioned. But however, generally entire application money would be taken at the time of application because of ASBA, entire amount would be blocked as far as this is concerned. Minimum allotment on the basis of minimum application size, basically, so allotment would be based on the minimum application size you made, rather than what you call giving entirely on the basis of proportion. Remaining any would be the, for example, the 5 different people applied for 2 lots, and another 5 different people applied for say 4 lots. Okay, so generally first 2 lots will be applied to the minimum whoever have applied. That 2 lots will be applied to everyone, and the remaining anything in excess would be again in proportion to the remaining applicants. Any questions, sir? And earlier there used to be only 50 allottees requirement. Now the allottees requirement has been increased to 200, so that the overall what you call trade would be there, rather than what you call once you apply for the IPO, then there is no active trading which is happening for the such SMEs. So at least there is minimum 200 allottees which are there. So there will be minimum trading happening in these SME exchanges. If there is no liquidity, generally people would be hesitant to apply, even if it is what you call very good company or the very good industry as such. So such reason they have increased this from 1st July to 200 allottees instead of 50 allottees. Minimum number of allottees requirement would be 200. And there is other areas which are like there is green shoe option which will be required, which can be exercised. Then there is price band and floor and cap can, I mean, like it can't be more than the difference of 20% between floor and cap. And then underwriting should be 100%. Okay. So it is not like the regular exchange where the underwriting requirement is not 100%. So here the underwriting requirement would be 100%. In case where there is under subscription, then it is always on the what you call merchant banker along with whoever other underwriters are responsible for taking out the 100% of the shares issue. Then issue generally should be open at least for 3 days, and then it can go up to 10 days. Any allotment money which is oversubscribed money has to be paid back. If there is a failure to pay back within prescribed time, then automatically 15% would, along with the 15% interest, it has to be repaid. But such issue is not there because of ASBA, which is basically amount is getting blocked and then getting released immediately after the what you call issue happens. Then there is option to migrate to the main board whenever the capital exceeds, I mean, like paid up capital exceeds 10 crores, or otherwise the main board can also what you call main board. Any company is there, the such company wherever the capital requirement is below 20, paid up capital is below 25 crores, they can also move to small and medium exchange. These are the couple of other benefits which are there in the SME exchange, introduced in 2012, and had not seen what you call pursue the scale that envisaged for the exchange. Maybe like last year there was very good movement. We are waiting and seeing only some of the states we see there is a lot of applications which are made. For example, if you see Gujarat or West Bengal or Maharashtra, you see a lot of SMEs getting listed, while we don't see much of these happening in southern part of India for sure. Okay, so I think things are moving in the right direction. Should be able to see more companies getting listed on the SME exchange. Having said that, like this is from my end. Any questions would be happy to answer. Vijay sir, there is no what do you call cutoff price thing now, which was there earlier. So the cutoff price is not there. You have to apply for only one price.
And what about cancellation or modification of the bids?
So there is no such cancellation or modification, sir, which was there earlier. Recently, that has been amended. So there is no chance of what you call amending the application at later point in time or canceling the application.
Even cancellation also not possible, right?
Yes, cancellation also not possible, sir. Which has been amended. I mean, like it's been a couple of months. These things have been amended.
Yeah, thank you, thank you.
Because a lot of things there are a lot of amendments which people are doing, taking advantage of it, and then that's where it's going or not going in a proper way, proper direction. So the SEBI has taken it took into consideration, and the regulations have changed.
Okay, okay.
You can always reach out to us, either HCAS group, or you can reach out to us maybe on our own mail. Would be happy to help out. Allow me a second. My contact number and email ID is out here. You can also note it down. Maybe whenever you have any question, please feel free to reach.
Manohar sir, we have one question in the chat box.
Yes, I
Uh, I can read it out for you
yeah,
if you're
please
fine
go
with it.
ahead.
Yeah. So we can only choose one exchange to get listed.
As of now, whatever we are filing, we are only going with NSC. Okay. We did not see it practically whether we can go with more than one exchange, because there are only two exchanges right now. One is BSE, SME, and NSE much. Okay. We'll see. I mean, like if there is such thing, others raise that question. I have gone through that. Okay. Others, you can throw some light. I mean, like if you have better idea, we're happy to. Yeah, NSA emerge is much more easier, and NSA emerge, at least I would say, is proactive from their side as well. We see a lot of times the NSA emerge guy is only reaching out to us and what do you call taking things little forward compared to BSSME. I don't know. I mean, like maybe it depends upon reason to reason, but what we see in Bangalore and Hyderabad is that NSA guys reaching out to NSA guys is much more easier. Others, you can throw some light. I mean, like, why this is only one exchange that has been need to be chosen? While regulations say clearly that both the exchanges can be taken, and one should be a designated stock exchange for sure. Otherwise, we can discuss one on.
Hi Manohara sir. Hi Suresh Babu.
Yeah, hi, Adarsh.
Hi everyone. So this is CA Adarsh Betala. I'm actually practicing in Chennai. So having done a couple of IPOs, we've done one SME BAC emerge with in association with one chartered accountant firm known as Siddharth Mehta and Co. And as far as my understanding is concerned, either of the exchange you can apply only once. So, like initially, I think during your presentation at start, you said that you applied for both the exchanges, but obviously, NSE Emerge is one platform which will show interest. This is what is happening in the current scenario right now, and that is what, if you check, SME has much more stringent condition. The BSE SME platform has much more stringent condition when compared to the SME Emerge platform.
Exactly.
You know, having the operational probability and all, net worth should be just positive. So yeah, so that is the case. That is the case when it concerns to the IPO. And right now, I don't think so. You can apply for both the both the exchanges. This is what.
I'll for sure have word with maybe exchanges, and then would be able to come back maybe in the group. Yeah.
Yes,
Okay.
yes,
We are
yes,
also
yes.
going right now with the NSA merge for the couple of companies.
Yes, yes.
Okay.
NSE emerge is quite much easier when compared to the SME, BSE, SME platform, and much more you know, supportive and collaborative. So that is what is my understanding as far as IPOs are concerned, SME IPOs are concerned.
Exactly. Exactly. We also did not go ahead with the BSc. We'll see. I mean, like,
Yeah, because I think you would have applied for BSE IPO, but they would not have showed any interest as such.
maybe I don't know. I mean, like BSc emerged, we did not try also.
Also, you did not try only, is
Because
it?
it is
Okay.
an NSE guys who has reached out to us
Mm-hmm.
in person. Then we had a discussions. Then we are going ahead with the NSE.
Makes sense. Makes sense. Makes sense. Makes sense. So we'll connect personally, and I'll explain you how we did for the SME thing also, BSE SME platform as well. And
Sure, sure,
if at all possible, we can explore. We can connect offline.
sure, sure.
Okay.
Thanks.
Okay. Thank you. Thank you.
Yeah, dear all, just to update once again, Mr. Prashant Jain, who is expected to be cover the main board IPO process and practical issues, due to unexpected health reasons, he gone a small procedural aspect at gums, so we are not able to make him to bring on the board today. We'll rest assured that next time we'll be planning in better way, and I will find an alternative also. We try to get an alternative speaker in the meanwhile, but it has happened at a short notice, so we are not able to accommodate the session as scheduled. Please pardon with us.
For sure, we will be getting back maybe Prashant only in a couple of weeks' time. Okay, we will accommodate this at the earliest possible on the
Yeah, please. Asha, over to you.
Thank you, everyone. Thank you, Manohar sir, for the valuable insights. I'm sure the audience have gained a deeper understanding of the SME IPO landscape. We can end the session.